Welcome to the BA3 lectures. Okay, so last time we looked on the reconciliations of the cash book, reconciliations of the bank account, the petty cash, and also the suppliers reconciliations. Okay, so now we're gonna look on the control accounts. So before we do reconciliation of the control accounts, we need to know what are they. Okay, so that when I do reconciliations, it must be easier for you to know, for example, which figure must I reconcile in the purchases control, which figure must I reconcile in the sales control. Okay, so control account, there is a definition. Control accounts are nominal ledger accounts that summarize a large number of transactions. Okay, so this one is taken from the sales daybook. Remember, sales daybook records the sales made and credit. Okay, so this figure is taken from that account. So it's taken as a whole amount. Okay, and be taken then placed in either in the purchase control or the sales control. Okay, so purchase control account, we record purchases made on credit. Sales control account is for sales made on credit. Okay, so we take the full amount or the full figure from the sales daybook or from the purchases daybook. Okay, whereby on the ledger accounts, these are single balances. Okay, for example, we have customer A, Abel, whatever the other name of the customer. Okay, so ledger accounts are used to control or to make sure that these customers are being kept on track. Okay, to make sure that they're gonna pay. If I have the balance owing in the company, you're gonna go in there and say, hey Abel, we have whatever 400 US here that is owing. So control accounts are used to track customers. Okay, so sales control account, ledger accounts are used to track single customers. Okay, so if you have a sales ledger, you're kind of using it to trace whatever your customers. Okay, so there are single accounts for each individual customer. And then purchases ledger, we use it to track our purchases. Okay, I want to know who do owe. For example, with this supplier that owe whatever 1,000 US, this supplier that owe whatever 200. Okay, so a ledger account makes us be able to kind of track those people, whereby the purchases, the control accounts, they are more used for accounting purposes. Okay, so these ones we only use it. We're only using it for accounting purposes. Whereby we need to use them to record how much receivable do we have at the end of the year, or whatever purchases, whatever is it, payables at the end of the year. So we're gonna be using these ones for accounting purposes. Whereby the ledger, we're using them to track our cash. Okay. So let's kind of show you what is happening here. Okay, show you what is happening before we go on and do the reconciliations. Okay. Okay, so on this, so let's say we have a purchases ledger control account. Okay, control account. So here we go. This is our T account. Okay, so I'm saying that this one is the purchases. Okay, it's purchases made on credit. So they want to increase on our credit side. Okay, and when we pay our customers, when we pay our suppliers, then the full amount here is going to be decreased on the debt side. Okay, that is what is happening on the purchases control account. Okay, and then on the sales control account, okay, what happened to this? Sales are considered assets. Okay, it's sales made on credit. Okay, so when we make sales on credit, they're going to be recorded on the side, on the debt side. When the customer paid their balances, we're going to go in there and record it on the other side. Okay, so you do need to know what transaction are going to increase this side, what transaction going to decrease this side. Okay, for you to be able to also do the reconciliations. Okay, so remember the ledger account said those are personal balances. Okay, for example, Abel How much does he owe to the business? Okay, he owes the business whatever 500 US. Okay, so these ones are individual balances. To trace me, for example, I'm gonna pay a 200. Okay, and then when I make a call, hey Abel, you have a 300 there that is owing, that is left. There's a 300 balance in there that I haven't paid. So you're gonna make a call looking on my personal ledger accounts, whereby this one is we record the total amount, okay, total amount from all the ledger accounts, from Able, whatever, Asianda, whatever they might be, okay? Then that's what I'm gonna record in this book. Similar again to the purchases control account. You're gonna record the total purchases, okay? And then on this one, let's assume that I was a supplier here. I was a supplier, not a customer. I was a supplier, not a customer. So you ordered goods from me of 500 and you only paid a 200, isn't it? And then there's gonna be 300 owing in here, okay? So I'm gonna call you, hey guys, I need my 300 back. So you see, you're using it to track, you're using it here to track the remaining balance, okay? So, and also in the purchases control account, we record the total payables, okay? The total payables. So this balance, along the other supply that you guys owe as an entity, we're gonna take the whole balance and put it on this side, okay? When you pay them up, you pay them at 200 can also be on this side, but as a total balance rather than an individual balance, okay? So this is the fundamental knowledge you need to know on the difference between ledger accounts and control accounts, okay? So in the next lecture, we're going to look in detail on what we do on reconciliation. So see you in the next lecture.